All right, welcome everybody to today's webinar on the very timely topic of tariff impact analysis. I think you're all aware that the last couple of days have been very eventful when it comes to the topic of tariffs, and we at Prewave also supported many of our customers with analyzing the tariffs impact on their supply base and their supply chains. And we want to take the time in today's webinar to share this approach also with you. Before we do that, before we jump in, a few logistical points. First of all, my name is Harald Nitschinger. I'm co-founder of Prewave, and I'm joined by Pyry Naukkarinen, our product manager for the Tier N part of our product. The webinar today will be recorded, and we will share both the recording and the slides afterwards. There's also a Q&A section for this webinar, which you can use to already ask some questions during the webinar. And at the end, we will also make sure we get to your questions if we couldn't get to them during the webinar. And with that, and without much further ado, we want to jump into the topic, tariff impact analysis. So I think all of you are aware the last couple of days have been very eventful. I think when it comes to global trade, this quote here that we have, there are decades where nothing happens, and then there are weeks where decades happen. I think this applied to the last couple of weeks. And we had an incredibly eventful a couple of days, starting on March 6th, with some changes to the USMCA rules of origin. On March 12th, then the 25% tariffs on steel and aluminium. Already saw some retaliation from the European Union and Canada. On March 26th, then the automobile and automobile parts tariffs of 25%, applying again also to automobile parts such as engines, transmissions, and other components. On April 2nd, then the, I think, Liberation Day with the reciprocal tariffs announced, really broad-based set of tariffs announced based on the trade surpluses of different countries. I think you're all aware. Then on April 9th, after some retaliation and escalation also between the US and China, but also other countries responding, on the one hand opening negotiations, on the other hand retaliating. On April 9th, then the announcement of the pause of the reciprocal tariffs for 90 days, while still keeping the tariffs for China, which at this point now are 145%. The day after, also the EU responded with a pause on their retaliatory measures. So right now we are, let's say, in this period of relative calm, maybe except for China. We also saw, I think, on the weekend, a few other exceptions added to the scope with China. So that was around semiconductors, electronics, and some pharmaceutical products. So I think the question that we have now is that with the, let's say, very eventful couple of days, end of March and beginning of April, and now being in this, let's say, period of calm, is this again the calm before the storm? What happens after these 90 days? Can we expect everything to go back to normal, or can we expect still some maybe complex scenarios to remain? Some countries being in favor. I think there was discussion around kind of a traffic light system with certain countries, red, yellow, green countries. So I think we should prepare for a more complex world also after July 9th. And that is also the topic of today's webinar. What can you do now within those 90 days to prepare? And for that, we want to introduce the tariff impact analysis that we are preparing and are running with our customers. And before we go into exactly how that works and also show a demo, maybe taking a step back and understanding that the tariffs affect companies based in the US when it comes to their supply base really in two ways. We have, first of all, what we call the direct impact. That is when a US-based company is sourcing from a non-US supplier. In this particular case here, a Canadian supplier, let's say it's an auto part supplier, and it's a 25% tariff based on that. So that's what we call direct impact, because it relates the direct sourcing from the tier one suppliers. Here, of course, the main question companies have is what's the cost impact? To answer that question on the cost impact, companies need to identify for the parts they buy the applicable HS codes and particularly the country of origin information, because it could well be that the parts that you are buying here from this Canadian supplier actually has a Chinese country of origin, because maybe this is just a Canadian trader which you are procuring here from. So there's a lot of complexity in there, but still this is a, let's say, matter of getting the right data in place, maybe filling some data gaps here and there. Generally, we see companies being able to tackle that challenge and having medium to good visibility on estimating these impacts. Then we have the second scope, which is the indirect scope. We call it the supply chain impact. That is when a US-based company is buying from a US-based tier one supplier who themselves is impacted in their supply chain. So here we have these indirect effects where even suppliers where you would, based on the first analysis, say, well, I will not expect a cost increase coming from them because there's no direct tariff on top of the sourcing. Well, there might still come a significant cost impact based on that supplier being affected in their supply chain. So let's say this is a tier one supplier based in the US, but they are heavily sourcing parts from China, heavily sourcing parts from Mexico or Canada. That will lead down the line to a cost increase to be expected also onto your sourcing from this US supplier. And that's the supply chain impact. And here, of course, the main challenge is, well, how to quantify this supply chain impact when really companies have typically poor visibility into that. That's exactly where we can help. But and how do we do that? So we can really help across both of these challenges on the direct impact and on the supply chain impact. And when we talk about the tariff impact analysis that we can offer, it's really answering three key questions or offering three key insights. The first one is, which of my tier one suppliers are affected by these tariffs? So on the direct impact, that's based on the country of origin information, where we can also help you plug some of these data gaps by procuring this data from the suppliers when it comes to the country of origin information. On the supply chain impact, it's identifying which of your tier one suppliers are most exposed to tariffs based on the deeper supply chain. The second key question is then, based on this first information, what's the estimated cost increase? Here we can give you per supplier a cost increase estimate on the one hand on the direct impact, but also on the supply chain impact, estimating based on our understanding of the deeper supply chain what this indirect cost impact from the supply chain can be. And lastly, the third question is alternative sources. Once you have identified a supplier where you can expect significant cost increases, the logical next step is to start looking for alternatives. And here we can also help you with the almost 2 million of suppliers that are currently actively scored and available within Prewave to identify alternative sources which have a, let's say, a low risk profile and are not affected by the tariffs in the same way. So which tier ones are affected? What's the estimated cost increase? And what are alternative sources? And these are the three key questions we want to focus now in the rest of this webinar. And we want to focus primarily when it comes to the remainder of this webinar on the supply chain impact, because again, that's where companies really are raising the biggest question marks, because there's, as it's well aware, many companies have little to no visibility into the deeper supply chain beyond tier one, but it's exactly the visibility you need to quantify this supply chain impact. So that will be the focus also of the demo and of the remainder of this webinar. So when we talk about the supply chain impact, well, we need to do that based on an understanding of the supply chain. That's what we do with tier-end transparency. So offering you the transparency into the deeper supply chain based on a supply chain mapping that we do based on a combination of data sources. Pyry will get into that in just a second. That transparency will give you visibility from your tier 1 into tier 2 and tier 3. And then we overlay onto this visibility of your supply network scenarios. And each tariff package or each retaliatory measure is one scenario that we can then overlay on top of your supply chain. The steel and aluminum package from the 12th of March, the automotive tariffs from 26th of March, the reciprocal tariffs from 2nd of April. And for each scenario, different tier 1s are affected, different upstream suppliers in tier 2 and tier 3 are affected. And based on that, we can then build the reports and the tariff impact analysis that we will get into now. And yes, also, we put it here, I think quite relevant is not just the tariffs as they are a cost impact factor when it comes to your sourcing, but it's also these retaliatory measures as we've seen from China now in various cases where certain materials on the 4th of April, it was again a set of rare earth minerals critical for semiconductor and electronics manufacturing across the board have been put under an export ban as a retaliation on top of tariffs. And that, of course, is an immediate potential supply disruption and not just as it's with tariffs, let's say primarily a cost impact, but an immediate supply constraint that we can also help you identify with this approach. So to end this introduction and let's say lead into the part where we actually dive into this impact analysis and how you can run that in Prewave and what types of data you actually get, I want to leave you with this idea. You have now 90 days to prepare. And what if after these 90 days you had a tool which you could use to rapidly understand the impact of any future scenarios? I think this is where many of the Prewave customers that have already onboarded into the tier-end transparency are, and they are prepared. And yeah, maybe today we can inspire you to also get prepared in a similar way. Now, before I hand over, we actually have prepared a short poll for you, getting a bit the interaction also going with the audience here. And the poll is based on 3 questions, and let me actually launch that right now. So if it's working, you should now see a poll on your screen, and it's based on 3 questions. The first question is, that's a multiple choice, so you can select multiple answers here. What's the biggest challenge you're currently facing with the tariff situation? Is it the uncertainty and continuously changing environment? Is it the lack of transparency into the deeper supply chain? Is it the ability to find alternative sources? Is it the availability of certain data like country of origin information? Really interesting to see your response here. Then the second question is, which of these is currently your primary concern regarding tariffs? Is it the cost increase? Is it the potential disruption? Or is it trade compliance in the sense of within your customs department, let's say also putting pressure on just the bureaucracy of it all? Yeah. And the third question, for how long do you think tariffs will be relevant for you day to day? So how long is this a topic now for 1 month, 1 quarter, for 1 year, or maybe multiple years? Multiple years maybe being the remainder of the Trump administration at least. We see the answers here streaming in. Already more than half of the participants responded. Maybe let's let it run still for maybe 10 or 20 seconds. All right, then let me end the poll and actually show the results if I can here. So you should now see also on your screen the results of the poll. So we received many answers, more than 100 answers here to this poll. And maybe on the first question, what are the biggest challenges with the current tariff situation? Number one is the continuously changing tariffs. I think that's clear. Then number two is the lack of transparency into the deeper supply chain. Actually, half of the 51% of the respondents answered that. Then followed by the ability to find alternative sources. Then the lack of understanding of the tier ones, so the direct effects. And also about a third of you struggling with the country of origin information of the parts that you are buying. I think this very well reflects also the conversations that we have. It also shows maybe that the direct effects are obviously more under control currently for companies, and the indirect effects are really the big question marks, the big question mark because of the lack of availability into the deeper of data into the deeper supply chain. Let's look at the second question. Which of these tariffs is currently your which of these is currently your primary concern regarding tariffs? Here, cost increases take the lead. 60% of you think cost increases are the biggest concern, but also potential disruptions. Could be through retaliation, but also just suppliers being stressed or simply the costs being too high, actually leading to disruption in supply as well. And last question, for how long do you think tariffs will still be relevant for your day-to-day? Multiple years, taking the lead with 56%. So I think the expectation is that this is not a topic for this quarter, but it's at least a topic for this year, if not multiple years. So very interesting, and thanks for sharing. And of course, if you have any further questions, feel free to raise them in the Q&A section. And with that, I want to hand now over to Pyry to give us a deep dive into the tariff impact analysis with Prewave.
Thank you, and welcome also from my side. If you can just, Harald, give me a thumbs up if you can see my screen. Perfect. Yeah. All right, so let's then dive into the practicalities of it. So how can we actually then support you with this analysis with the Prewave solution? I think let's say, good place to start with is for any of this analysis, we do need the tier end data in place. So essentially why? Because all of these, as we saw also in the poll, these indirect effects that we are now talking about, this is something where we then need to have visibility into your supply chain up to some level. So this would be the first thing that we need to do with any customer. So we need to find out who are the relevant players in your supply chain. And once we have this information in place, then we can flexibly run this analysis. Just a quick primer on how we do this. So obviously, in case you're able to bring any data about your own supply chain, beyond your tier ones, we are happy to put it into Prewave. But we are definitely helping you unearth this information, who are the relevant players in your tier N supply chain using public data such as customs data, media data, and our prediction model. Here, the customs data, of course, being very relevant and central because the tariffs are essentially a customs topic, as well as then also raising information from your suppliers in the supply chain, meaning this shared data here. Some of you who might be more knowledgeable already about the sub-tier transparency topics and especially the customs data might be thinking that there are some limitations with this data, that not all countries declare this data, which is perfectly fine, perfectly true. And here, however, because this, at least currently, given, let's say, the importance of the Trump administration here is a very US-centric topic. In this case, there's a silver lining because US happens to be one of the countries who does declare this customs data. So we actually do have a very good visibility from the customs data to the suppliers, to the imports of the US-based companies. All right, so if we then start with the first part of this analysis. So what we did here, it's like an anonymized customer case study. We looked at the sample of US automotive suppliers, so tier one suppliers in the automotive industry in the US, like a sample of just less than 500 of them. And in the first step, so we checked which ones of these suppliers are the most exposed to the tariffs. And here we're talking about the case of this reciprocal tariffs, so this big package of tariffs, where there was not really any limitations on the goods that are affected by these, nor the countries, where just basically the difference would be the level of the tariff. And here we then found that for these suppliers, something like a quarter of them had sourcing which will be somehow affected by these tariffs. If we look at this in Prewave system, how can we help here? What can we do here? So we have a tool here that we use for many similar scenarios that we call exposure analysis. And here, basically each of these tariff scenarios would be like a different analysis. Now here I prepared, for example, 3 examples. We could have one for the automotive tariffs, we could have one for the reciprocal tariffs, we could have one for the Section 232 steel and aluminum tariffs. When we choose one of these, we will first see like the configuration of the analysis. So here we are using as our tier ones, this is this sample of the tier one suppliers, and then we are essentially looking for suppliers essentially from abroad. I mean, there was not really any country scope given here. We do know from our data that certain countries are relevant for the US automotive industry at large. So we are looking for specific countries here. If we wanted to make this into another scenario, like let's say these steel tariffs or something, this would be just a matter of applying a filter here that we are looking for certain commodities only. In this case, the harmonized system codes relevant for this steel and aluminum. But as the example on the slides was for the reciprocal tariffs, let's stick to no like filtering on the commodities here. Once this is defined, we will then first get a prioritization of the tier one. So we can see that which ones of my tier ones had the most sourcing of those countries. So basically from these biggest import partners of the US automotive industry. Therefore, then indicating who has the most exposure. If we want to investigate some of these cases in more detail, we can always click these preview buttons here and dive into some particular company. So here I picked, for example, some Pirelli location. And here we can then see, for example, if we want to get some particular information about a specific relationship between the companies, we can, for example, see that this company has imported different kinds of, these are some sort of, as far as I understand, plastic and rubber-based products, and the last shipments that we see in the data are somewhere towards the end of last year, for example. This is basically how we can help with the first part of the analysis. So under some conditions, in some scenarios, see which ones of the tier ones that we have are the most heavily depending on, in this case, sources which will be subject to the tariffs. If we back to the slides just for a second to see the second part of the analysis. So, okay, now that we know who are the most affected suppliers, then of course it is interesting, well, how badly are they affected? What is the cost increase like? In this case, we, for example, found that, let's say, this is now the cost increase from this indirect cost increase from the supply chain only, not what this, because this is not the direct sourcing scenario, but the indirect one. We found cost increase from supply chain up to 6.5%. Of course, if you would be sourcing from some other suppliers directly from abroad, the cost increase might be a lot bigger in this case. For example, if there was some direct sourcing from China, where we now have like more than a 100% tariff. How is this represented in the system? We can always we have here an export button. We can get the reports out of the system. And here, for each supplier, we have a then this cost increase estimate here in the system. So we can see based on their sourcing and how much, let's say, cost pressure sourcing from each different country introduces according to our model. We will then sum this up and come up at an aggregate number for each supplier. We will have in the end of this webinar and in the follow-up mailing the possibility to book a demo, a meeting with us to discuss this more in detail, this cost model. We are happy to share more details in follow-up meetings here. But this is basically the format. This is how it looks like. So we calculate this estimated cost increase for each supplier. Regarding the final piece, the alternative suppliers, what are we trying to find here? So here it's about finding suppliers who are trading the same products that you're buying from your tier ones, but who are not affected by the tariffs. And in this case, we, for example, have the or are less affected by the tariffs. So, for example, domestic suppliers. And what we can also offer, because at Prewave, we not only do this tier N transparency, but we have sophisticated methods for estimating and measuring supplier risk levels that we can also then already give you a general risk estimation of these suppliers as well, because this is interesting information in case you would be changing a supplier, whether you are then changing to a supplier that has suffered, for example, from some specific risks in the past, and you might want to avoid that. In this case, I had an example, for example, for copper suppliers, and we identified some 80 alternative supplier sites located in the US, and put also a risk assessment on these suppliers. And how this looks like is, sorry, we represent what we call commodities in Prewave. We can query from similar data sources as we use for the tier N transparency. Also then companies who do business in certain products. And here, for example, we have certain harmonized system codes related to copper, and we can query companies based on that. We can then use our risk analysis capabilities and say, okay, in the risk analysis, I want to include companies who are from this copper collection, and let's say I want to limit this to the United States only, and then add these to the risk analysis, as we call it. In the risk analysis, then we can get here like a matrix representation of the suppliers. Who are suppliers with low risk? For example, here I said I would like to have suppliers who have a higher risk score than 65, which is kind of like a lower to medium risk, to, for example, then weed out those suppliers from my sample who have a very high risk, and then focus my efforts in identifying any alternative supplier to those suppliers who have a lower risk. And this risk analysis then allows us to see quite granular information also on like detailed risk category level that, for example, which kinds of events or risks has each of these suppliers suffered from in the past, therefore helping you estimate the riskiness of these potential alternative suppliers. This would be the short overview of how we're doing this analysis, how we can help you in the Prewave system. And I would now hand over back to you, Harald, for the outlook.
Thank you, Pyry. If you can jump to the next slide, please. So to sum up, it's not 90 days, but it's 84 days left. And customers which have already the tier-end transparency within Prewave, we can support them today with these reports and the exposure analysis to answer the 3 questions that were shared earlier. So in case you're an existing customer and are interested in receiving that information, please reach out to your customer success representative. If you are not yet a Prewave customer, then get in touch with us. Here we will share a link for you to book a demo with us, have a meeting. Here we would need to initially start with your tier 1 suppliers, build up the tier-end transparency so that we can then run the impact analysis on the scenarios. 84 days is enough time to be prepared and to get started. I will share a link in the chat where you can actually book a demo with us in case you're interested. With that, I want to say thank you, and we move on to the Q&A section and look forward to your questions. Having a look here onto some of the questions, already answered some in writing. How do you source and verify the data for these alternative sources? So Pyry here just explained. I mean, we are drawing here on the network and data of close to 2 million suppliers we already have in the system, understanding which products and commodities they are selling, and giving you then the ability to filter and select these suppliers in the Prewave system. So for instance, if you see a supplier in a certain commodity, could be fasteners, electronics, brake parts, whatever, you can then select that commodity in Prewave, let's say fasteners, and then filter for instance, US-based suppliers with a risk score above 70 to give you a set of companies that are relevant. How do you define, or what's your source for the place of origin or the country of origin within the product? So that is data that we cannot procure in an automated way, but that would be based on an outreach to your supplier, because let's say the formula and the way we come up with the country of origin information is not something that can be realized based on the data we have without asking the supplier. So this is essentially a questionnaire-based outreach that we can facilitate using here functionality that we have built also for other use cases, such as the deforestation regulation. Could you please explain how you use the system in the case of rare earth material export restriction? Maybe Pyry, that's something that you can quickly tackle. Not even sure if you have that in the demo still prepared.
Sure. Yeah. I mean, I can also show it. I don't have the demo as such open, but I mean, what I can show you, I'm just can you now? You should see the Prewave, right?
Yes.
Yeah. So basically, the we could set it up in a few ways, but essentially it would just be a different thing that we are looking for in the supply chain. So with this feature, this exposure analysis, we could do it in such a way that, okay, now I'm looking here suppliers from certain countries. If we would be looking for suppliers from certain countries, we could additionally here add a what we call a commodity filter, so that we would be looking only for a certain type of commodities. Or if it would be like a specific group of companies that we, for example, know that there's these 10 companies who we know are very important for this industry, this raw material. This analysis is a bit more flexible in the sense that in Prewave, we have a concept called a collection, which is basically just a list of companies. So we could represent these 10 companies then as a list here and look for companies in this collection in my supply chain. And basically what the system would tell you, it would spit out exactly the same list. So you would then get like a prioritized view of your suppliers, that which one of your tier ones is the most connected to these particular companies. And we could also do this analysis over more tiers than just 2 tiers. Why we did 2 tiers here is because for the tariffs, we are interested in like a specific, let's call it the trade lane, that we would be interested in US company or like US companies who import something directly into the US. So therefore we looked in this case until tier 2, but in some other case where we would say we would take more tiers into account, we could increase also the number of tiers. So essentially it's exactly the same tool, the same tier N data in the background, but we would just configure the analysis in the Prewave application a little bit differently.
There's a question, Pyry, which I think relates to what you just showed. Who defines these commodity filters? To maybe you can quickly explain how we can set those up and tailor it to the use cases.
Yeah, so we can maybe look at this screen also, that essentially these commodity filters, this is just like kind of a representation of, this is a simple case of some like copper. So you would have copper ore, and then we refine this ore into some articles of copper, and there might be, of course, some production steps in between. We could represent it in a more elaborate way, as long as we can relate it to some what are called the HS codes. And we do have quite extensive selection of these available here in the system. We can see all kinds of commodities available. So all of these, where we have these 3 little boxes, are some commodities. But in case it should happen that some commodity is of interest to you that we currently do not represent in Prewave, we are happy to extend our list of commodities. Some of you are very knowledgeable about, let's say, your value chain structures. If you know it, we can just represent it in Prewave. We also have a team in the company who is doing this kind of research. So in case you would need support in defining what is, let's call it, the abstract value chain structure of your product or your industry, we can help you with it as well.
And when it comes to the specific scenarios, so for instance, tariffs applied to certain HS codes, this is also what, let's say, we set up then proactively in the system. So that's not something, let's say, you as a customer have to click together, but we will have then a predefined commodity covering these HS codes in the system. There are still quite a few questions, and I will try to kind of run through them in order. How reliant is the system on us providing the right tariff number and country of origin? Well, when it comes to the supply chain impact, actually not. Yeah, so that is something that is actually because we're looking here not at your relationship towards the tier 1, but actually tier 1 and beyond. We actually don't need tariff numbers and country of origin. What we are giving you is the estimation on the deeper supply chain, and that is not reliant on that. Would the platform also help with something such as EUDR? Yes, that is actually an active solution that we're offering, also used by many of our customers. And I mentioned earlier that the process of gathering the country of origin from suppliers is quite similar to the way you gather the origin information you need for the deforestation regulation. There's also a question on how this exactly works. So is this a request that's passed along from tier 1 to tier N? So we are really interested in just gathering for the certain part or product that you're buying, the corresponding country of origin. Fully understanding that that is sometimes information that depends, for instance, if that supplier is a trader, not a manufacturer themselves, something they need to also gather from their suppliers. And that is actually, again, using the approach we have also for the deforestation regulation, getting a link that you can pass along the supply chain, or that your supplier can pass along to their supplier to add that information on their side. Any question you want to tackle, Pyry? Feel free to jump in.
I'm just looking through the questions.
How much does this impact analysis cost for existing Prewave customers? Well, the first requirement is that you have actually the tier N part of the system in use. So we can only run this supply chain impact analysis for, let's say, the tier N enabled suppliers. If that's in place, and that's what we've done also with many customers, we can happily share reports. If you're going then into a longer term scenario where this is, let's say, a weekly or monthly occasion, we might think about adding here a new module. But today, this is an added service which is included for our tier N customers.
There was one question about the tariffs. Is the underlying assumption that tariffs are fully passed on and therefore reflected in price increases? In that analysis that we were looking, yes, this was assumed that the suppliers would at least try to pass all of the costs, but this is, of course, let's say, a parameter that could be changed and is probably highly case dependent depending on what kind of contract you would have, what sort of bargaining position you would have versus your suppliers.
Mm-hmm. How do you incorporate the cost for transportation in the identification of alternative suppliers? So understanding the question that if you're shifting now from maybe a Canadian supplier towards a Indonesian supplier, obviously additional cost of transportation factors into that. That is currently not factored into the alternative supplier suggestion. Our main hypothesis here would be that you would be mainly looking for US-based suppliers. So for parts that you've previously sourced from outside the US, or suppliers that are, let's say, heavily supply chain impacted in the US, the best path would be to find alternatives within the US. Obviously, that's what the tariff regime also intends, let's say, to accomplish. Sourcing from within the US would be the safe bet, and that's why we would also focus on recommending US-based suppliers. Thereby, the cost of transportation would actually be either same or similar, or maybe even go down versus maybe a Mexican or a previously foreign supplier. Is it possible to get the report on the tariff impact analysis without a full Prewave license? No, because we need your tier ones, and we need the transparency into the deeper supply chain. So you would need some Prewave license, which also captures the tier N scope to get started. But it's achievable within, let's say, the 82-day time frame until, let's say, the next wave might come.
There's also
Go ahead.
there's also a question, is your data applicable to Southeast Asian countries? In principle, yes. So if we talk about this US tariff scenario, for example, there it is quite applicable to any country basically because we have quite good visibility on the US imports because the US is one of these so-called declaring countries of the customs data. If it then is, let's say we would want to analyze the other way around, so the imports into some Southeast Asian country for this or some other scenario, let's say depends a bit on which Southeast Asian country. Some of them are these declaring countries, some are not. Even in the case where they're not, we do still have some visibility based on the other countries who are declaring countries and do some business with these countries.
There's still a few questions about the details that we can provide on the alternative sources. Somebody's asking whether we can, let's say, take account of some permits and registrations needed for specific industries, such as pharmaceuticals and others. Some other person is asking how detailed, let's say, also the granularity of this selection of alternative sources really is. So to the first point, we do track certifications of suppliers in the Prewave system. So let's say we cannot, let's say, currently say whether we track all of the industry-specific certifications that are needed for your particular context, but overall certifications that are made available by the supplier, for instance, on their website, these are tracked. Also, information we gather through self-assessment. But it's really something we need to look at on an individual basis. But let's say your standard ISOs and other certifications that are more common across industries, those would be there. On the detail of the kind of selection of suppliers, really here, as Pyry also showed earlier, the granularity is kind of on the HS code level. So we would not track computer chips down to the specific type of the chip, but rather computer chips as a category. Yeah, and fully understood that that is not the granularity you need, but it's a starting point. And I think for other more commodity categories, again, think about fasteners, raw materials, maybe some other more commodity appliances, electronics. Here, I think the granularity we have is actually enough to find alternatives based on the data we have. Will the recording be shared? Yes, we will share the recording and the slides in a mailing that will follow most likely tomorrow morning European time. What else? Let me quickly sift through the questions. Will you deliver actionable insights once the risks have been identified? Let's say more broader question, but yes, I think each of these suppliers that we have within the Prewave system are scored across a broad spectrum of risks. You get visibility into the history of incidents with that supplier across more than 150 categories, ranging from financial stress to natural disasters, to legal issues, ESG issues, sanctions, giving you really a broad 360-degree view on the supplier. And based on that, you can then also initiate actions within the Prewave system. And I think with that, we answered, if not all, most of the questions. And yeah, I want to thank those that stayed until the end and for the active engagement during this webinar. I think the topic is very important and really a matter of concern for many companies at this point. So yeah, to sum up, we will share the recording, the slides, and also the ability for you to book a demo with us in the follow-up mailing. And yeah, with that, thank you and see you next time.